Meta Platforms Inc., trading under the ticker Meta, remains one of the largest global digital advertising and AI-driven technology companies. In its Q2 2025 earnings release, total revenue is expected to range between $42.5 and $45.5 billion, reflecting solid mid-teens year-over-year growth. Analysts currently estimate second quarter revenue of around $44.8 billion and earnings per share of approximately $5.84 versus $5.16 a year ago. Meta's advertising business, powered by its family of apps including Facebook, Instagram, WhatsApp, Messenger and Threads, continues to serve as the core engine of profitability. That segment is projected to generate about $43.9 billion in ad revenue, gains of approximately 14.6% year-over-year. This momentum is attributed to AI enhancements that have increased Reels conversion rates by roughly 5%, increased daily spent time on Facebook by 7%, and boosted Threads engagement by 35%. SMB and e-commerce ad clients now spend more due to improved ROI from AI-based tools such as Advantage Plus and Andromeda. Operating income for the family of apps is forecast at $22.38 billion, up nearly 15.7% year-over-year. Margins remain robust, standing above 40% even as Meta continues heavy investment in infrastructure and R&D. Reality Labs, Meta's XR Metaverse division, continues to be a strategic drag. Expectations call for an operating loss around $5.35 billion in Q2. That represents an increasing trend and shows no clear path to profitability, though it remains a long-term innovation bet with uncertain returns. Meta's capital expenditure plan is unusually large, with projections between $64 and $72 billion for the full year, driven by AI infrastructure builds and Reality Labs development. CEO Mark Zuckerberg has spearheaded aggressive talent recruitment, including poaching Roaming Pang from Apple and hiring leaders from Scale AI and GitHub for Meta's superintelligence labs. These hires reflect a push toward AI supremacy, though Wall Street expects them to deliver measurable ad revenue gains over the next 1 to 2 years. Meta's annual operating costs are expected between $113 and $118 billion, including increasing line items around compensation for technical and AI talent, server and data center operations, and scaling moderation and compliance teams. The company ended Q1 2025 with net income near $16.6 billion and net income last 12 months approaching $66.6 billion. Free cash flow is estimated at roughly $96 billion for the trailing 12 months. Meta carries minimal net debt, with over $78 billion in cash and around $29 billion in liabilities. Return on equity and return on invested capital both score among the highest in major tech companies. Meta now trades at a forward multiple near 22 times earnings, lower than many other mega-cap peers but above traditional media. Its stock price corresponds to a forward price-to-sales ratio of nearly 9 times, compared to sector norms around 6 to 7 times. Analyst sentiment remains highly favorable. Out of 27 tracked analysts, 25 rate Meta a buy or equivalent. The average 12-month price target stands near $754 to $755, implying modest appreciation of around 6% from recent price levels near $720 to $725. High-end targets, ranging up to $935, are based on optimistic assumptions about AI monetization, Reality Labs discipline, and successful deployment of WhatsApp business tools. Discounted cash flow, DCF models that assume continued ad revenue growth in the mid-teens, gradually narrowing Reality Labs losses, free cash flow above $90 billion annually, a long-term growth rate of 2%, and a weighted average cost of capital near 8%, produce intrinsic per-share fair value estimates between $190 and $225. Combining DCF outcomes with relative market multiples yields composite intrinsic values clustering near $200 to $250 per share, far below current market pricing, suggesting the stock is richly valued under conservative assumptions. Technically, Meta stock trades in a range between approximately $700 and $790. Key support lies near $690 to $710, while resistance is observed around $780 to $800. A sustained breakout above $800 may trigger renewed momentum, particularly if Q2 deliveries include strong AI KPI disclosures or better than expected guidance. Volume flows and relative strength indicators remain neutral to slightly bullish, reflecting steadiness in long-term institutional positioning. Meta offers a compelling blend of scale, profitability, shareholder returns, and long-term AI ambition. Its advertising engine remains strong, and AI enhancements have begun driving user engagement and conversion. However, Reality Labs' losses and elevated capital spending demand consistent evidence of ROI to justify current valuation. Investors should closely monitor metrics such as Reels monetization KPIs, WhatsApp business feature rollout, Reality Labs cost discipline, and ad margins. Catalyst risk is meaningful if AI payoff disappoints or macro advertising demand weakens. Still, for growth investors with conviction in Meta's AI trajectory and global ad dominance, the current perch near 720 may offer limited upside but controlled downside, until clearer results emerge across AI, video, and VR pillars.